My name is Sincere Williams. I'm a recent First Star Academy alumni and also a recent Richards High School graduate. I'll be attending McKendree University in the fall to study political science and public relations. So I kind of just wanted to talk about social justice and my personal experience surrounding it. Um, I'm both a gay and a black man, and growing up, I dealt with a lot of bullying because I'm gay, and I had to transfer a couple schools, and it never really stopped. By my freshman year of high school, I really started to get over it and just started to be myself. I came to the conclusion that whether I'm myself or not, no matter what I do, people are always going to find something to throw at you. So might as well be myself. But the problem was is that I really started to open up my eyes to all of the injustices surrounding me, and I saw that people weren't so easily able to say, "Hey, let me just shrug that off," you know. So I really got into helping other people and looking into their interests. So that's kind of I've always been an advocate for social justice, but it wasn't until this past August when I started my senior year, I really got into political science. And I realized that a lot of our social justice issues lie within the government. And, you know, the government are the ones who make the legislation to positively or negatively affect marginalized communities here in America. So my senior year, I was the president of a club called the Minority Academic Advancement Project. And that was my first time really diving into social justice and being in a position where I can make decisions based on social justice issues. Um, we did things like had a lady running for mayor come to speak, you know, chief of police come to speak. We educated people about just different issues going on in the community and how they can help. So we're really just trying to reach out to marginalized students across the entire school district here in Peoria and just educate them and, you know, let them know that there is a club and there is a group of youth out there, you know, that was advocating for them. And so MAP really, which is what the Minority Academic Advancement Project stands for, MAP really got me into that. And then now I'm here, graduated vice president of Young Revolution and president of the Black Justice Project. Um, Young Revolution, we didn't originally start off as an organization. We just came together as a group of friends after the George Floyd death. We decided that we just wanted to hold a protest. 2 days before we held the protest, we got together and decided that. And then 2 days later, we brought over 1,000 people out in downtown Peoria to march with us, and it was amazing. And from there, we couldn't stop. So from there, we decided to make ourselves an official organization, and we're still working on it. We had another rally. We're still working on fundraisers. Another event in late July, a Pride event, anti-ICE event. So just different social justice events. Now, Black Justice Project is essentially almost the same thing. We're fighting for the same thing: social justice for marginalized communities here in Peoria. But Black Justice Project does it from a more legislative and political side. So we recruit people to run for mayor, and we educate people on who, you know, candidates are, who our current mayor is, what their personalities are like, and what their backgrounds are. We encourage people to vote. We get young people to register to vote. So we do the same thing, just a little more with the political science side. Um, so to me, with that being said, community activism, you know, you don't have to be someone. I used to think that you had to be like big public figure status to go ahead and make a statement and make change, but you really don't. You can be anyone, and I learned that very, very, very quickly. You can be anyone. All you have to do is speak out, whether that be a social media post, whether that be wanting to make some statement to the media. You know, just speak out. You can be anyone, and you can make change. So far, some of those changes I've been seeing in my community. Mainly is just we've had a lot more open dialogue with everything going on in America right now. We kind of refocus some of those issues back into our own city. Specifically, in the past 3 years, we've had 5 police-involved shootings, arrests, and/or deaths of unarmed Black men. Um, and we basically were just like, we're talking about everything going on in America, but it's happening right here in our own city. So what are we going to do about that? So so far we've had a more open conversation about that, and some officers have been reaching out to the community. And there has been some tension with the relationship between the community and the Peoria Police Department, but essentially communication is key, and that's what's happening. Everyone is communicating, everyone is getting those issues out there.
So you guys, like this list right here, like that tax checklist, if you ever have to file a tax return, I recommend you click on the link, and then you're going to be able to see a list of types of documents you should keep in case you have to file a tax return. But I want to go over them anyway, high level. There are websites that will they say they will file your tax return for free, like TurboTax and HR Block, but it's only true if the only document you have is a W-2, which is when you're an employee and you have a full-time job or a part-time job, but you have to be an employee, you can't be a tenant, and we'll go over what's an employee and a contractor in a second. But if you're an employee and all you get is a W at the end of the year, they will file it for free. If you get any other kind of documentation, they won't. So it's kind of like, devil's advocate. I think they try to get you in by just saying it's free if it's a very simple return, but usually they'll find something else you have to pay for them to file it. So when you're an individual, and you can be single, you can be married, you can be a mom with kids and just be a head of household. You don't have to be married. You can file. There's so many ways to file your tax return, but the form you file is called a 1040. So that's what a tax return is. The IRS, which is the government at the federal level, will call it 1040, and then you have the same returns you have to file for California, and they have different names and different numbers, and I don't think we need to know all of them. But when you hear 1040 and it's it's due April 15th, you have to file your taxes by April 15th, except this year because of COVID. The tricky part is you also have to pay all your tax amounts that are due to the government by April 15th. So by April 15th of 2020, you had to pay your taxes for 2019 and then file your return for 2019. Now, there are two main kinds of employment. You can be a full-time employee or a part-time employee, and that's called an employee. So you work for a company. They'll ask you to come in. The first day of your job, they'll make you fill out a Form W-4. And that form is I know it's a lot of details, a lot of information, but the only thing you have to remember is they'll give it to you anyway. And you can just follow the prompts. It's half a sheet. It's pretty quick and easy. But that form will decide how much money to take out of your paycheck, and you will receive the net amount. So if you tell them, hey, I'm single, I have one job, they'll take enough taxes out of your paycheck so that at the end of the year, you don't owe any money because they're taking the right amount out of your paycheck. If you're not an employee and you're a contractor, then they don't take any money out of your paycheck, and then at the end of the year you have to remit all your taxes. Actually, every quarter you have to pay the government your taxes because they don't like you to wait until the end of the year. They'll give you a penalty for that. Now let's talk about that for a minute because that's so important. What is the difference between an employee and a contractor? The main difference is an employee is someone that the employer will provide a computer and any type of hardware you need to do your job. The employer will tell you what to do, what hours you need to work. They'll tell you what you're working on. They're basically, giving you different orders and requirements. An independent contractor is someone that has their own business usually on the side. So a perfect example is we're an accounting firm. We're called Connected Accounting. I have a firm called Marikite that does my marketing for my firm. They're an independent contractor. So they're not an accountant. So they're not within my field of business. So they can be an independent contractor. They're not an individual. It's a business I'm paying. I'm not paying Maggie. I'm paying her business. And she works on her own hours. She has her own computer. So it's okay for her to be an independent contractor. It's very important for you guys to understand that because a lot of the times employers prefer to pay you as an independent contractor, but it's not legal. So for you to understand your rights. Like if somebody's telling you what to, if they're asking you to come in from 9 to 5 and they're giving you the tools to do your job, you should be an employee. And that comes with then the employer, they'll pay some of your taxes on your behalf. Because when you're a self-contractor, you have to pay both the employee and the employer taxes to the government. But when you're an employee, the employer, they pay that portion, their portion. So it's really important for you to understand that part. Now, at the end of the year, if you're an employee, your company will give you a W-2 and will say, hey, we paid you $40,000 gross. We took out $15,000 of taxes, and this is how much you made net. If you're an independent contractor, at the end of the year, you'll get a 1099 that said we paid you $40,000. So those two are important to understand the difference. If you're an independent contractor, you're considered self-employed. So one of the pages on your 1090 on your tax return, on your 1040 tax return, is called a Schedule C. So if you're an independent contractor, and that might happen to either one of you or anybody else, because for example, it's hard in this right now to find a job. So you may be, hey, like I have this great idea, I'm going to offer graphic design, or I'm going to offer engineering services, and I'm a consultant. So you build your little LLC, and then you are getting paid, you know, this client pays you $5,000, this client pays you $250, whatever. You start collecting money from everyone. Your Schedule C is gives you the option to use expense. So you need to buy a laptop. You need to pay for Microsoft Office. You need to pay for Adobe PDF. You need to pay for whatever that's for your business. Those are expenses, and you should track those expenses, because at the end of the year, if you make $40,000 as a 1099 from a $5,000 1099 from this guy, you know, a $700 1099 for all your clients, at the end of the year, you take all of those 1099s, and if they make $40,000 or whatever amount, so just an example, and you have a computer and dues and subscriptions and maybe some meals and maybe other things, you can deduct that. So you're not going to pay taxes on $40,000. You're going to pay taxes on $40,000 less all your business expenses. You have to keep receipts and you have to keep track of it. And it's preferable to have a separate credit card or a separate checking account for that business in case you get audited. It will reduce your risk for, you know, questions. The only thing you have to know is that anything that's related to a meal, even if you pay, let's say in 1 year, you have meals as an expense and you spend $500 in a year, like having coffee with clients or whatever, you can only deduct half for tax purposes. So what the government will do is when they file your taxes, they'll take 500 divided by 2, and only 250 can be used to reduce your taxes on the 40,000. So meals is the only thing you have to remember, and entertainment is 0. So don't try to buy Lakers tickets for your clients. A, the Lakers are not playing this year, and B, it's not tax deductible anyway. So that's the two things to remember, because a lot of people spend money on these things and then they're shocked when they hear, I can't use that, but I took this client out to lunch, or I took them to a concert. So no, you can't. Those are the only things to remember. So I'm going to step back and repeat myself. Like, if you are an employee, you get a W-2 and all your taxes are taken out of your paycheck by your employer. So usually you're pretty well off at the end of the year. You don't have a lot of taxes. That's the only source of income. If you're a 1099 contractor, then you have to track all your income, all your expenses, and do some accounting. And then best practices and things like that. So if we talk about an individual, whether you're a contractor or an employee, it does not matter. There are other things you can deduct. So for example, I'll pick a very simple one. So when I used to be an employee for another firm, I used to be an employee. I got my W-2 every year. I don't have a house. I'm not married. I don't have kids. You know, I don't have any of those deductions. So I would make charitable donations. I would give money away to charities, and you can add those amounts. Sometimes they're tax deductible. I also had if you have a lot of medical expenses, sometimes they're deductible. I'm not going to go into why they are or they're not, because it's all thresholds and it's numbers and calculations and, you know, if and when, but keep that, because you never know. When you pay for your car, your DMV fee every year, keep that bill, because if you read your bill on it, there's a license fee that's tax deductible. So part of your car payment, that registration every year, a portion of it is tax deductible. So keep those expenses. So medical, charity, anything you spend on behalf of a business, if you have your own business, and any tax you pay, whether it's a property tax, if you own a house, your mortgage, any interest, you guys with student loans, at the end of the year, you are going to receive a 1099 from the bank saying this is how much interest you paid this year on your student loans. That usually can help you on your taxes. So any forms you receive at the end of the year, combine them, gather them. And then if you don't, like I know a couple of tax CPAs that can file returns for like $300-500. So like if your lives are a little bit complicated, I can give you a referral. You can also use TurboTax, even if your life is a little bit complicated. They will ask you TurboTax when you're online on their website. It's $150 if you have anything beyond just a W-2. So if you get a 1099 from the bank, you have to pay $150, and then they will like prompt you question by question, window by window, ask you a bunch of questions, and then kind of walk you through the information you need for a tax return. But again, if you refer to that list that is highlighted in blue, you'll be able to get the list of all the documents you need to gather for your tax return preparation. And finally, the rules about what everybody's always asking me, how long do I keep this stuff? You can be, so if the IRS wants to audit you, they can go back 3 years. So I just filed my 2019 return. So they can audit 2019, 2018, 2017. However, if they find fraud in any of those 3 years, they can go back 7. So I usually tell clients keep 7 years of records, and the things you have to keep for life are things like if you buy and sell a house, if you buy and sell an investment, things that are like really major, large contracts, keep those for life. You may have to show them at some point. So any questions on this stuff? Always make sure that with any financial institutions or the DMV or anything, that they always have the right address. At the end of the day, they will always email you or mail you all the tax forms that you'll need to file your tax returns. So make sure you always open the mail and collect those. I hate pieces of mail. I have an app on my phone called TurboScan, and it's $4, and it takes pictures of documents and it transforms them into PDFs automatically. So I just take photos of everything, it converts it into a PDF, and then I just email it to myself, and I keep all my records in Google Drive. So that way, during the year, if I make donations, like if I give $25 here, if I give $200 here, like to whoever for charity, I print all my emails as a PDF and I save it in the same folder, so that when December 31st rolls around, I have all the stuff I spent during the year. I have my DMV, I have all the things I know for business I've spent in one folder, and I just go through it at the end of the year. And then any piece of mail that comes in, take a photo with the app, and then I'm done. And then at the end of the year, I just go through that giant folder and sort it, and then you're done. But yes, you're right. So DMV, if you are a contractor and you're not an employee, beyond just the DMV fee on your car, for example, as an actually when you get a job one day, if it's your own business, or if you end up being a contractor, you can deduct some of your mileage, and your gas. And think, so you either get the mileage dollar amount per mile or you get gas. So you choose, right? So for example, for me, I have a car, I have a lease on my car, I have gas, I have insurance on my car. So those 3 things, I don't do the mileage because I'm a business owner. So I take the 3, and you can, and then I say at the end of the year, 50% of my car is being used for business, 50% for personal. So I take 50% of everything I spend on my car, and it's a business expense on my Schedule C. So there are ways where so always think about, what are you spending money on? Is it ever related to business? When you file your 1040, if you're a W-2 employee, usually it's even better, but when you file your 1040, they'll say, okay, you made $40,000, and if you're single, this is your standard deduction. Let's say $6,000 is your standard deduction. So 6,000 is here, right? That's the government. They give you $6,000 is like a cut. Like automatically you take 40 less 6,000 and you're only taxed on 34. However, if right here in this pocket, you have student loans interest, mortgage interest, DMV fees, charitable donations, medical expenses, and that amount is bigger than your charitable donation, that you can usually use this amount instead of this is like a basic, this is what we expect most people to have as a deduction. But if you can prove you have a lot more, you can itemize it, and it's called an itemized deduction. But usually, even I still mainly use the standard. You start using itemized differently, and they've changed the laws in California and blah blah blah. But yeah, that's what that is. So what they do is they say, okay, but when you're an employee and you fill out that W-4 form the first day of your job that says, are you single? How much? That form is key, because that form, whatever you put on that form, is how the company is going to take taxes out of your income. And usually they'll assume you're going to make 40,000 this year. They know the standard deduction, so they know how much taxes to take out. But that's going to be based off of what you tell them, how your life is set up. And that's led to issues before if people don't know how to fill out the form. Because you don't want to have a surprise at the end of the year. Hey, you owe $6,000 more in taxes.
So what if you're investing, let's say, in the stock market, or you're trying, I'm still trying to get used to it, but what if I invest there? Do I have to report it?
That's a very good question. So, few scenarios here. If you are an employee and your employer gives you a 401k, which is a way for you to save money for retirement, that is reported on your W-2, because they take the money out of your income. It's not taxable today. So if you make $40,000 and you put $1,000 into your 401k that year, you actually are now only taxable on 39, because that 1,000 is being put into an investment account. And when you retire and you start taking that money out, you're going to pay taxes on whatever money and capital gains you're going to make in that 401k. However, let's say today you don't have a job, but you do want to put $1,000 into a Vanguard, retirement account, or a Vanguard investment brokerage account, whatever you want to call it. You want to put money into the market. And you say, okay, I'm going to put $1,000, I'm going to buy stocks, or I'm going to buy bonds, whatever you want to buy. You go to the market, you buy whatever you want to buy. At the end of the year, Vanguard will send you a 1099, and it's called, there's a bunch of different 1099s. There's a 1099 miscellaneous, which is a contractor, there's 1099 interest, dividends, whatever. You're going to get 1099 interest or dividend from Vanguard saying, hey, Marhawi, you just made $300 this year in interest on your $1,000 investment. You need to pay taxes on $300. And they'll send you a form in the mail, and you'll just use that form, or you can download it online. Usually you just use that form and you add it to the multiple questions TurboTax can ask you, or you just give it to your tax person. You'll pay taxes on the gains or the interest income, because there's two ways to make money on the market. Well, there's many ways, but you either get paid during the year, an interest, a dividend, whatever you want to call it, or you buy and sell, and then you make money when you sell something if there's a gain on it. So you either get taxed on interest and dividends or on a gain. If you just put your money in there and it's losing money, you're not going to pay taxes on it. Does that answer your question?
Yes. Complicated, but we'll get it eventually.
Yeah. The only thing you have to remember is that whatever you do with your money, if you put it somewhere in a banking institution, they'll send you a form at the end of the year telling you how much is taxable.
Also, sorry if I take anybody else.
Yeah.
But I remember they were giving us advice in First Start that you should not put all your money or all your things in one bank account. You should have multiple. Can you elaborate more about that?
So only one checking account is fine. Be careful with credit cards, because if you have credit card debt and you can't repay your credit card in a month, usually the interest rate is around 25%. And I have friends that are painfully going through that right now, where they only had $5,000 in credit card debt maybe, but 25% of that, it's like $1,300 a year they have to pay just to carry that debt forward. They can't even repay the basis. So credit cards are very dangerous. I always tell people, unless you have to use it, otherwise don't. unless you can pay in full every pay period. Every time you get paid, if you can repay your credit card in full, then yes, it's nice because you get points and miles and whatever, but otherwise be careful. So that's one. So one checking account is great. You can have one credit card. The more credit cards you open in 1 year, it's going to hit and really damage your credit score. So be careful opening too many accounts in 1 year, because your credit score is going to go down, and then it takes a year to come back to a high number. And every time, if you need to lease a car, they will run your report, and that also dings you for a year. So don't do too many transactions every single year. Anyway, going back, one checking account, one credit card is great. Over time, as a family, whatnot, you may have more. Retirement accounts are very important. Save for your retirement. If you save like $10 today, every 7 years, it more than doubles. So saving $10,000 when you're 20 can be almost, $500,000, or like whatever, $250,000, $500,000 when you're 70 years old. So money multiplies when you put it in the market. And I am not savvy enough and smart enough to know how to invest my money. So every time I was given a 401k or retirement option, I always put money in what they call a target fund. So I was like, I'm going to retire around 2050. And then I was like, all right, I'm going to pick the target fund 2050. And they'll invest your money in a risky way when you're 20. And then as you get older, it gets safer. So you don't have to figure out what's in the portfolio. They do it for you. So again, like one checking, one credit card, one retirement account. If you are not employed and you can't get a retirement account today, you can do a traditional IRA through a Vanguard. That's what I do, because Vanguard is really cheap and it doesn't cost me very much. The fees, there's so many hidden fees when you invest money. So use platforms that don't have a lot of hidden fees, because they take money out of your investments otherwise. Vanguard is great, it's cheap. I don't make any money from Vanguard, just so you know. But you can put $6,000 in a traditional IRA every year if you want, towards retirement. And yeah, does that answer your question?
Yes.
Any other questions? I think the only thing I'll add that might be helpful for you guys is it's hard at first, because we don't know this, we don't learn that stuff in school. It's intimidating. There's a lot of vocabulary. There's a lot of lingo around this. But I would say to have a very basic, safe life, like figure out how much money do you make a month, and jot down on a piece of paper, what are your monthly expenses? How much do I pay for rent? How much is my insurance? Do a small budget and see if you can, like, if you are having a hard time managing money, then I recommend don't pay anything with a credit card ever. And only take money out of the checking account and use cash, or use your debit card, but don't use a credit card, because you're going to suffer from it down the road if you can't repay debt. So that's my tip. And then keep track of how you spend money there's a free app called Mint, which is what I use for my personal finances. It's managed by QuickBooks, so it's really safe. It's like Intuit is like one of the biggest companies in the US. And I link my checking account to Mint and my credit card, and then all my transactions every day, they come in it, and I can code them. I'm like, that was groceries. And it starts to recognize it. It recognizes Ralph's groceries. It recognizes Starbucks' restaurant. And so it will start coding everything so that I can kind of figure out how am I spending my money. And also at the end of the year, I'm like, how much did I spend on charitable donations? How much did I spend on my car? And it's already there. So
saying that, because I looked at that app, but I have some trust issues, so I never put in my information. So it's good to know that it's trustworthy, because it looked like a really helpful tool.
Yeah, it's owned by Intuit, and Intuit owns all the QuickBooks businesses and so many other companies. Like, they own so many companies. But yeah.
Okay, cool.